Hello, and welcome to the Money Movement. I'm really excited to be here in Davos, Switzerland at the World Economic Forum, and today joined by founder and CEO of Brex, Henrique Dubugras. Really great to have you on the show here.
Thank you so much for having me. Really appreciate it.
Yeah, absolutely. So I'm going to start with like a very basic thing, which is what do you think of Davos? We're both fintechs here in new industries. World Economic Forum, a lot of old industries. The median age is probably inside the forum a little older. But like as a company that is a disruptor and building, what's it like to be here, and how are you finding the whole thing?
Yeah, honestly, I'm very much enjoying it. I guess this year being in the spring makes it much easier. I'm doing all these walking meetings, which is very nice. It's very nice outside. Let's see how I do in the winter. But so far, so good. I think it's been very good to connect with both people that are super relevant to our business in terms of customers, investors, and partners, but also getting to learn about general geopolitics, what's happening around the world. And I think, as a CEO, it's important to have a worldview and an understanding of what's happening. I would say that, people that I've been meeting are very open to tech and, understanding how tech and is changing the world, both in our industries and in other industries. I don't know how true that was 10 years ago here in Davos, but I'm definitely feeling this year that a lot of people from traditional industries are very open and curious to learning about what we're doing.
Yeah, that makes sense. It seems like the forum has over time just added more and more young technology companies, and I think that in the past sort of had a reputation of being like all the biggest companies in the world or whatever, and now it's cool to see. And like as you saw, like the promenade is like got I don't know how many crypto things going on.
So many crypto things.
It's just sign of the times. Cool. Well, maybe. I always love to hear someone's personal journey a little bit, and I think our viewers and listeners as well. So maybe just kind of take us through, founding a Brex. What was the aha? How did it happen? And then kind of a little bit of extrapolate kind of to where you are today.
Absolutely. So just to give some background to everyone, I'm originally born and raised in Brazil, which somewhat relevant to crypto in some ways because we lived through a lot of inflation and currency changes and, before my time. But, definitely we can talk about a little bit of that later. But grew up in Brazil, born and raised, started coding when I was 12 because this game I wanted to play was a paid game. And I realized that if I learned how to code, I could play for free and build an emulator for the game. And
nice.
I did that.
My first coding was also basically like figuring out how to like make games on like old Apple II computers.
Exactly. Mine was more trying to copy an existing game that was paid, and like build a kind of an emulator. And I found this community of people doing it and, kind of learn how to code and build my own version of the game that instead of a subscription, you could play it for free. Mm-hmm. And it got super popular in Brazil until I got these like legal notifications saying I was breaking some sort of patents. I didn't really know what patents were, but my mom got super upset and pushed everything off. So that's kind of how I got into technology super young. And then, at 14, I decided to start, I got obsessed into getting into Stanford because of this TV show that I saw called Chuck. And, and then I found this Brazilian guy that was graduating from Stanford. And we did this deal in which I would code for him for free. In exchange, he would teach me the process. So I got into startups by being the first engineer at this ticketing startup when I was 14.
Wow.
And that's how I got into, kind of the startup world, started reading TechCrunch, understanding this world of Silicon Valley, got kind of obsessed with it. After a year, left to try to start my own education company, which didn't really work out. And then, I was having a little bit of trouble with my parents. There's not a manual of like how to deal with your 15-year-old kid who kind of wants to drop out of school and start companies and it's coding, and so I got emancipated, kind of moved out of my house, started supporting myself. Right. And I was running out of money, so I needed to make some money. I found this hackathon in Miami that was worth $50,000. And I was like, wow, if I can win this thing, it's like more time, I can like just do my stuff. Oh my God. So I went to this hackathon and built this dating app that was called Ask Me Out. That was kind of like Tinder, but instead of geolocation as Facebook friends, you could like and match your Facebook friends. I won the hackathon, came back to Brazil. and tried to launch it as a business. It also didn't work out, but it's how I got into payments for the first time. I was implementing a payment system for it. And, because basically the idea was if you got matched with someone from your Facebook network, would you pay $5 to know who it was, right? Like, so that was the idea. Well, sounds like a good idea. Didn't really work, but I got to introduce payments. And around the same time, I met my co-founder, Pedro. And Pedro, he had a similar upbringing, even though we're completely different. He started coding when he was 9 years old. And when he was 12, he got very hacker famous for jailbreaking the first iPhone 3G in the world.
Wow.
And, and he was all over the news, both in the US and in Brazil. And so I heard about him before, but didn't know him. And then he got hired by Brazil's largest payments company to go work as an engineer there for iPhone security, because no one in Brazil understood about iPhone security at that time. And he was like hacking iPhones. And then we met in the end of 2012, basically fighting over text editors. I was Vim, he was Emacs.
Oh, yeah.
We got into this endless fight on Twitter. It got too complicated to fight over 140 characters. And we went to Skype, and on Skype we became best friends. This is probably, we're both 16, last year of high school.
Amazing.
And then we decided to start our first company together. So we started a payments business in Brazil that was kind of like Stripe of Brazil, so online payment processing. We did that for 3.5 years. This one worked for Brazil standards, grew it to a little bit over 150 people, $1.5 billion in TPV. And we both got into Stanford. So we're like, okay, like we need to decide we go, we don't. So we sold the company to go to Stanford because we wanted to build something in Silicon Valley. It seemed that everything big in tech was coming out of Silicon Valley. There's no Brazilian unicorn at this point. 6 months in, we decided to drop out and start Brex. We actually got into YC with a VR idea. And within YC, we decided to pivot to fintech. And the way that kind of the idea came about was we saw that all these startups had raised a lot of money, right? Like, $2-3 million after demo day, and they couldn't get a corporate credit card.
Right.
And we thought that makes absolutely no sense. Like, how can that be? You have $3 million in your bank account. And we went to ask the banks, like, why don't you do this? And they're like, well, what if they burn the money? And we're like, well, you can just monitor it and see if they're not burning the money. It's like, no, that's too advanced for our systems.
Right.
And we're like, okay, so that seems like an opportunity. So
that's amazing.
Yeah. So it's like a simple idea, right? But I think because of the legacy systems of the banking technology, they all use kind of the traditional legacy bank.
They've got a transaction banking core, Jack Henry, or whatever.
Exactly.
It's like writing like data observation and event.
Exactly.
Like you can't do that.
It's like $100 million in 3 years project, for this startup thing, like
and
whatever.
You got to hire a strategic consulting firm and Accenture and who knows what.
So one big decision we had early on at Brex is actually rebuilding all that ourselves, and not relying on any of this stuff.
Right.
So we
have that in common. We were like, we built our own transaction banking core.
I think it's super important. Otherwise, you don't own your own destiny, and you're like always bound by the legacy technology that your vendors.
Yeah. We'll come back to that theme in a little bit. Yeah,
that's awesome. We launched kind of like a year later, and there was this credit card for startups. If you were a startup, you raised money, you could get it and start spending immediately.
Yeah,
and that had an incredible amount of product market fit. That product went from 0 to like 100 million in annualized revenue in 18 months.
I have a question about that actually. So I watched that. It was hard to miss because you guys figured out like a direct marketing model. You must have figured out like your CAC, CLTV, or whatever it was, like very quickly. And like you scaled out like in, I assume, like major cities where you had like startup activity, and you just like were like everywhere with outdoor advertising and digital advertising, and like it was hard to miss.
Yeah,
right?
Hard to miss. That was the goal.
Hard to miss, right? It's exactly the goal. Surround people, et cetera. But maybe for the other startup founders out there, just for a moment, like what was the calculus? You don't need to share proprietary data, obviously, but like what was the fundamental calculus that you had in terms of the unit economics to make that work and to have the confidence to like spend at the level that you did? And did you have to raise money to do that, or were you just funding it off of cash flow at that point?
Yeah, so no, so we were lucky. So one of the things we realized for our business is that anything in our business we would have to have a lot of money. Yeah. So before launch, we had
fintech's expensive.
Yeah, fintech's expensive, right? We had to do this huge system build out. The banks that we wanted to work with, they needed to be sure that we're going to be around. So we had a lot of runway. So even before launch, we had to raise $57 million.
Right.
But actually, the thing that everyone knows us about is this kind of like San Francisco billboard takeover. And at the time, the whole thing, if you bought billboards in scale, it was $300,000 for 3 months of most of the billboards in San Francisco.
Yeah.
So it wasn't that expensive, if that makes sense. But the thing that I learned is that I think Silicon Valley is obsessed with, kind of like trying to directly measure ROI. And, when talking to some of the best marketers in the world, like, I think just getting into people's like awareness is such like a big thing.
It all works together.
Yeah,
right?
exactly.
Awareness and direct response and everything, it all works together.
So, it kind of what you're saying, because it was hard to miss, every time a sales rep reached out to a customer, like, oh, I heard of Brex, like this is not something like I didn't heard. And the other thing that, we then lost a little bit later, and happy to talk about mistakes, but like, the message was so clear. What do we do? We're a corporate card for startups. Like there's no questioning what we do and who we're for, right? And I think that helps a ton.
Yeah, totally. Okay. So that was the core idea, and you solved that problem. You got into build it. Now you guys have executed a lot since then.
Yeah.
Right. So like, where are you today, basically?
Yeah. So then the next thing that happened to us is we decided to, 18 months in, our customers were like, hey, I love your credit card. It's amazing, but I hate my bank.
Right.
And we're like, okay, that sounds like an opportunity. So we then built our business account product, which is, we're technically not a bank, but for all intents and purposes, our customers use us as their bank. So they run payroll with us, they deposit money with us, they get FDIC insurance, et cetera, et cetera. So that did really well. Not so much in like migrating, people who already had bank accounts to like, move to us, but all the net new startups.
De novo startups. Right?
Exactly.
What do I do? Where do I start? Right.
Exactly. Because we could approve you like in a day, right? Versus like all the other banks, you have to go to the branch, you have to do, there's a whole thing. Yeah. And that started doing really well. We didn't charge for wires, ACH, anything. So that product did really well. It didn't monetize as much for the longest time because interest rates were zero, right? So. But we thought that in the future, it'd be a good business for us. And also for our customers, it's like an amazing experience and it goes well with our card product.
Yeah.
So that was kind of, I would say, phase 2 of Brex, right? And in which we were going. And then COVID happened. And then during COVID, we were trying to figure out, okay, like what is the next stage for us? Like, this business banking thing is going, the credit card thing is going. What is the next phase for Brex?
Mm-hmm.
And a lot of our customers that we signed up when they were really small now are big, right? Like Brex started with 2 people.
Of customer success.
Exactly, right? Exactly. So we sign up today like roughly 80% of every Y Combinator batch, right? So that was true, for a few years ago. So all these companies are getting big.
Yeah.
And as they were getting big, they started having all these expense management needs. So they started implementing things like Expensify or Concur or some of these expense softwares, but everyone hated it, right? Like it was this like general thing.
It's awful.
Where like everyone thought like this is terrible.
Right.
And we were like, why is this terrible? These are like, especially the newer ones, right? Like people have been trying to attack this expense management problem for a long time. Like why are they all terrible? And we realized is that when companies start, right, they start with this culture of trust. Everyone trusts everyone. You're giving everyone cards, right? Like everything is going right. But then some tail event happens.
Yeah. After parties.
Yeah, after parties. Someone goes and buys this first class ticket when they shouldn't, an expensive bottle of wine, something. Then the CEO gets super upset and says, oh my God, I don't want this to ever happen again. Yeah. This is like not the culture of financial discipline I want to have in my company. Right? Like, this person doesn't, et cetera. So they get really upset and they implement some sort of process and system to make sure it never happens again. Yeah. But that process makes it hard for 99% of people to get 1%.
Yeah.
Right. And that's how kind of bureaucracy starts. So that happens all across the companies, not only expensing.
Totally.
And then we launched Empower recently, which is kind of our product to solve that. And like, how do we make it easy for 99% of people while like catching the 1%, right? Yeah. Which has been having a lot of traction.
Is that like rules-based or is that like?
So there's 3 things that we kind of focus on, with that. The first one is we believe most employees are trying to do the right thing, but it's sometimes hard to do the right thing, right? Like even people lose their receipts. It's like really annoying. So first thing is like, hey, we just automate a lot of receipt capturing. And because it's our card, it's kind of attached to our card. If you swipe our card, we can get the receipt. Yeah. Number 2 is policy explainability, right? Like a lot of times, let's say you're coming to Davos, you're an employee, like what can I spend? Where can I stay? Like what are the policies? Like, I don't know. Like, and sometimes you do something wrong because you just don't know. Right. So within the context of their spend, kind of give you super easy explainability. The third thing is for managers, right? Like there's this fake thing that people think that managers review every expense.
Right.
But it's not true. No one has time to look through every single Uber you got. They just rubber stamp it and move on.
Yeah.
It's kind of like a fake process. So what we do is we actually can detect which things are out of policy and only flag to the managers thing out of policy. And things that are on policy, we just approve, right? And if the finance team wants to have a second look later, they can. So it's kind of this manage by exception or trust and verify principle, right? And then we also give a ton of visibility into what's happening, right? So because we have everything is based on budgets, you can see exactly if people are under budget, over budget, and if you're doing an offsite, like how's that going in real time, and having this like clear accountability for people. So that's been generating like a ton of response because companies want to move fast, right? So DoorDash, for example, is the first marquee customer for this product. Mm-hmm. And they told us this story that like really stuck with me, which was like, there was this GM from a warehouse that's trying to sell ice with beverages during the hot summer to see if it would sell. Mm-hmm. And he went to finance and the finance team said, hey, you need to go to procurement go. And it took 6 weeks to buy $1,000 worth of ice. They negotiated from $1,000 to $920. But then by the time that happened, the summer was over, right? Mm-hmm. So there's this cost of time that a lot of times companies don't value it or don't revisit when they implement processes, which I think was what we're selling. If that makes sense.
Yeah, totally. That whole, what you've just described is just like the perfect example of why software driven companies are just gonna blow away legacy financial companies, right? It's just such an obvious example, but there's sort of this evolution of fintech. I don't know. I hate these the fintech 1.0, 3.0, whatever it is. But there is this evolution, right? And in some ways, payments, some form of digital payments was the first thing that happened, like PayPal or what, that was sort of fintech or whatever. And now you're getting deeper things. But as you think about the kind of problem space scope, it seems like this is going way beyond what a bank would ever consider in their remit, right? Yeah. How do I go into the workflows of the financial operations of a company and and focus on delightful user experience or what have you. Just philosophically, how do you think about the problem space that you're trying to solve, and obviously just maybe a little bit of commentary on how you think that we kind of where we are in the evolution of sort of how financial services gets built.
Yeah, for sure. So I think that banks, if you think about it, right, they were almost like a government concession, right? Hey, I'm giving you this concession to take depositor money and lend it out for the economy. Right. So the banks, they were thought out. This is my mission, right? This is what I'm responsible for. Yeah. And because the systems were very bad, the point of integration between the banking and the softwares that interact with them are really bad. There's a lot of data and experience that gets lost in that point of integration. Mm-hmm. So we believe that it's kind of this vertical integration between the financial software and the financial services. Yeah. In the same way, we think for example, Android was, hey, we have this OS and then no matter what manufacturer, and there's some clunkiness that happened because of that. And Apple's no, we're just going to vertically integrate everything into an experience, right? So I think that's kind of how I believe things are going to happen. We're going to do things which is hey, how do we integrate both the financial services and the software they use to interact with it in one single place, right? But then the thing that is complicated is, and touching a little bit on kind of your world as well, even if we do that, then there's all these other rails that are inter kind of company and bank things that are then legacy software from a long time ago.
FTP servers and text files.
Exactly. Honestly, we have to deal with a lot of FTP servers. It's part of the job, even if we're building a lot of our core banking, right, for all the ACH payments, checks, globally, everything is still like that, right?
No, that makes a lot of sense. I think there's sort of in some ways, there's a couple of these I don't know, mega trends, whatever. One is, clearly like deep focus on user experience and like ultimately like solving real user problems, and whether that's a business user or other, and like that's just like a radical different point of orientation versus like a bank. Like the second like big thing is basically just like data, and how, you know, data can, it obviously supports great user experiences, but just like fundamentally, like banks are not really great at like doing things with real-time data or any of that. And then like the third big one, which is sort of a little bit where we're operating, is like, you know, dealing with the fact that, you know, you can build a great user experience, but if the pipes and the plumbing are kind of like still what they are, right, it has like inherent limitations. And those could be like time, unit economics, interoperability, other things, right, that are there. And the whole crypto space, at least as we came into it, or as I was thinking about it when we started Circle, you know, with digital currency and public chain infrastructure and all of this, like the thought was like, actually, you could build, you know, a ground up kind of financial market infrastructure and a ground up way to represent dollars and euros and other things, and make that like actually composable and programmable and all these things. And so we're, you know, as you know, like slowly executing against that. But like, where do you see that, you know, kind of deeper changes in the financial system? Like, where do you see that connecting to what you're doing? Obviously, we think there's a great connection there. But like, where do you see that? How do you think about that in the realm that you're in?
Yeah, no, I would say that, look, I honestly think that credit cards are honestly amazing, right? Like, think about it in some way. You can swipe this little piece of plastic in Thailand,
right,
and, you know, you're going to get billed in the US, and this merchant in Thailand gets the money like 2 days later. Right? Like, it's actually pretty impressive, right? Like, as a system. But I think that not everything runs on credit cards, right?
Yeah.
And then if you go to the SWIFT system, for example, I think that's terrible. Like, that's like,
yes.
like there's these like banks in the middle, there's all these things, right? Like, I think that.
And underneath those cards, right, there's like 12 intermediaries and like, and, you know, like, it's unbelievable. And Swift is actually underneath there too. Like all these things, layer upon layer upon layer, obviously like using, you know, kind of collateral and other things, money can move a little bit faster than ultimately, you know, kind of how stuff goes. But
and the reason I bring it up is just like, I think for our business, you know, like the part where we can do on card, that kind of works, if that makes sense. That's like, you know, it could get better, but it works. The stuff that we don't do on card, I think that's terrible. You know, like that is like very, very terrible. Because, you know, everything like settlement against different currencies and paying people's bank accounts. Like if I send an international wire to someone in Brazil, like the branch manager of his bank doesn't really even know how to do that, you know, that affects like there's a lot of problems with like international money movement, especially when you get at a card. So, you know, that's something that we're particularly excited to, you know, on what you guys are building and the new layer of infrastructure to do. And I think there's also a lot of new use cases, right, for, you know, that we're seeing in crypto, with crypto gaming, NFTs, et cetera. They're just even like native. And yeah, they still need a lot of the workflows that we're doing. And they still need to interact with the real world, you know, and stuff like that. So people always ask me like, oh, is crypto going to kill your business? I'm like, no, I really wish crypto took over. Because I'm going to adapt a lot faster than the banks, you know?
No, totally. I mean, it's like, I think like, you know, I think Block is an interesting company, obviously, too. And like, you know, clearly like they've done an amazing job of dealing with like, you know, what do merchants need to like set up their business and like, and handle a lot of stuff that's there. And that's a big business. It's a SaaS business and they have all these pieces, but at the same time, like, I feel like there's a view to like, you know, if we could actually just like get down to like a little bit more commoditization of like underlying like payment rails, like that would be a step forward. But you could still build amazing experiences for merchants. And you can still be at the core of their operations, and you can still, you know, I think there's
all these addendum services around it, right?
Yeah.
Like payment companies, they're going from being straight processing to being processing being one, like a Shopify, right?
Yeah.
Like, payments is a way they monetize, but there's all these things around it.
Absolutely. And capital intermediation and what you can do with the relationship with those businesses as well, and supporting them in those ways.
The other thing I was going to say is around global. So like, deglobalization has been like the hot word here in Davos, right? Yeah. Like, of the supply chains and blah, blah, blah. And I think, look, that's definitely a factor that's going, but I think there's this globalization.
We were talking about that at dinner the other night.
Yeah, right? Exactly.
I think both of us were like, we're like long on globalization.
Exactly. Because I think there's this whole globalization now. Like, just to give you a stat, when we started, before COVID, we measured is only 10% of people that use Brex actually had employees outside of the country, right? Everyone, 90% US. Now it's 51% hiring outside the country, right?
Yeah,
like
totally.
That is like globalizing in nature, right? Like knowledge, experience, workforce, everything.
We went from basically like Boston and New York and a small number of people in Dublin to like we're now in like 12 countries.
Exactly.
And it's growing, we're adding more, and it's unbelievable, right?
Exactly. And I think that in my view, whenever things go global, globalization, global infrastructure gets accelerated a ton, right? And it matters a lot more.
Yeah.
Because I think that, again, things locally, they're bad, but they work. Mm-hmm. Global, a lot of times it doesn't work,
It's just like and financial infrastructure is a place where it's still trapped almost like in a pre-internet era. I mean, it's in the sense of like everything's still like bound up inside of like a country perimeter, the actual like infrastructure itself. And it's like this regulated kind of like proprietary things. And like, that's the opportunities to like break through that and have an internet of money, right? Which I think can assist with that. And I'm interested just as an entrepreneur as well, or, as you think about business models a little bit, like, I always wonder whether over time, like payment utility, if unit economics of sort of storage movement of money kind of becomes more like data or whatever, like do the financial companies of the future look more like SaaS companies as opposed to like banks like that are like focused on deposits and lending, or is there a hybrid? What do you think that looks like?
I think that and this is the whole debate around interchange, right? Like, why does kind of like interchange exist? They regulate in some places and in others. What's the advantage of that? I do think, though, that payment processing, it's a little bit more just than data moving because of the edge cases of like what happens if it's fraud and like credit cards have credit risk, they're real credit, right?
I call it the assurance layer of
exactly
payments,
the assurance layer of payments that needs to be charged, right? Like someone needs to take risks in economics and things like that. And I think
that will always exist.
That will always, I would say, exist. Rewards are a very interesting thing to me. Coming from Brazil, no one cared about rewards.
Yeah.
And then in the US, everyone's obsessed with their points, right?
Yes.
So I would say that I'm skeptical that I think rewards are a stronger force of nature than most people realize, if that makes sense, on the current system. So I think whatever new system is going to have to replace it with something, as interesting.
I wonder if building blocks like NFTs become the mechanism design, open, interoperable. They can work and be used. You can be inventive and creative and so on.
Actually, the U.S. is the only country that I know of that actually doesn't have a points coalition system, right? Like Amex has its own points, and then United, everyone has their own points. Yeah. In Brazil, like there are points, but it's like one thing you can trade between multiple things, like etc. Right. There's a great thing to be like an open distributed kind of network.
Absolutely. That would work around the world.
Exactly. That will work around the world, etc. So I think like there's going to be infrastructure designed for that. And, there's going to be some economics that come from that as well.
Yeah.
So, but I do think, there's definitely a lot of space for disruption.
Totally.
But if you look globally, right, like a lot of countries try to compete with Visa and MasterCard locally.
Mm-hmm.
So in Brazil, there's probably like 10 card brands.
Mm-hmm.
And I talk about Brazil just because I'm from there, but I'm sure this is true and around the world. That local, the bank said, like, why do I need Visa, MasterCard? Like, I'll just do my own thing over here. You know, I'm both sides. The problem is the global scales. Like when you travel, like, you know, how do you spend it?
Right. Yeah. Interoperability, global, et cetera. Yeah. And, you know, definitely problems to solve at scale with software on the internet eventually.
Exactly.
Yeah. Yeah. Very cool. And maybe just like at a personal level, I'm interested in your own like journey around crypto. Is there stuff that you've become more interested in, or like areas that you're personally excited about?
Yeah, for sure. So, look, for Brex in our business, the first thing we kind of like dabbled into crypto is the rewards, right? So, like, hey, can you now use these reward points to, you know, convert to Bitcoin and ETH and, you know, USDC, I think now too. So, how do you like kind of use that? And it became our most popular rewards redemption program.
Amazing.
Which
tells
awesome.
You something.
Yeah,
about startups in these days.
Yeah, exactly. It tells you something, right? So I think that's like super interesting. You know, we've been thinking about what else to do in the business. The thing is, like, businesses, they're not early adopters of stuff a lot of times, right? Especially like VC-backed businesses. You know, this is not exactly your money, so like, you know, there's some resistance there. So we've been thinking about how to go next. But personally, on a personal side, I'm extremely excited about crypto gaming, honestly. I do think that, look, we're in the early innings of that, but you know, if you ask the next generation of kids if they could be professional gamers, and that's like a thing, like these kids would be like excited about that, you know, like it would be amazing.
Yeah, I mean, you look at like the whole like play to earn or work, you know, all these like incentivized behavioral, you know, token based, you know, models with NFTs and sort of taking possession and ownership of objects and other things. It's
exactly, and the interoperability of them. So I think that like if playing games can become an industry, right? And because I think, you know, what we need still is the best game developers in the world to build games that are both fun and you can earn money, right?
Totally.
Which I think is kind of the journey that a lot of people are going through. Because if you only have people, you know, wanting to make money, then it becomes a little bit, you know, like a pyramid schemey kind of vibe. But if you have both players who this is a really fun game and I'm willing to pay for it and have fun, and also people can earn money, I think that can become like a real kind of industry.
Yeah, I think you know, whatever, the gaming industry is bigger than Hollywood, and for the most part, it's just money going in.
Yeah,
and so if you could combine the passion and the energy and the enjoyment and other things, where it's money going in and it's money coming out, that's pretty
exactly. And also NFTs, like, you know, a lot of people criticize on like digital JPEGs and everything and all that. Look, me personally, like I was at that view, you know, I'd say a few months ago, but then talking to 18-year-olds, think about 18-year-olds that were born 2004, right? Like that's, you know, crazy for me to think about. They don't have an apartment to put their art, you know, like they don't, people are not coming like, you know, and there's social media, right? Like, you know, I think what OpenSea did with Twitter, your Twitter profile, like if that's a way of them to expressing their brand and expressing themselves,
right?
Like I totally believe that. I think it's hard for, you know, the older generation to understand, because I was having a discussion with a friend of mine about clothing brands, right? And he's like, well, clothing brands, the expensive ones, are all about showing status. I'm like, I think that was true, but that's not true anymore, right? Like, people who use like Balenciaga, it's like, you know, they align with Kanye West's values and, you know, what he's about. And it's more about aligning with him than it is about kind of, you know, like showing that you can afford Balenciaga.
Yeah.
And I think NFTs, there's a similar thing in my view, you know? So that's like at least my personal opinion.
And no, I see all that. Very cool. Well, so maybe last like high level question for you is you know, I kind of like to always ask, imagine a world where, like, you know, as you think about, and you could do this in the lens of Brex specifically, or kind of what you're hopeful for out of all of the kinds of things that we're just kind of like talking about, but like a few years from now, 3 years from now, 4 years from now, how's the world different?
I think the world that I want to see is insanely globalized world. You can work from anywhere. You can pay anything from any currency. You can there's no there's no friction between going country by country, city by city. We solved all the problems around like a truly like globalized world. So I would love that country to happen. I think it gives smaller countries a much fairer shot also at becoming, growing, developing their economies. It gives people the ability to live wherever it makes them happiest and still work for the companies that make them happiest. And it reduces the friction for companies to hire talents around the world. So I would really like to
I love that vision. I am totally aligned with you. So hopefully we can find ways to work together to make that happen.
Absolutely.
Awesome. Thank you, Henrique.
Thank you so much.